Hi, everyone, and welcome to the Amber Data Derivatives podcast. I'm here with John Palmer, who is the president of Cboe Digital. John, how are you?
I'm doing great, Greg. Thanks for having me on today.
Yeah, I'm really excited. You guys have some nice developments coming online. I know you just launched futures back in January. So maybe you could give us a kind of a brief overview of Cboe Digital. What do you guys offer? Are you guys a regulated exchange? Do you offer spot and derivatives? And maybe you could touch on some more, nitty gritty stuff such as clearing.
Yeah, 100%, Greg. Thanks for asking. So to start, Cboe Digital operates both a spot and derivatives exchange and clearinghouse. So you nailed it. So on the spot side of the fence, we offer trading in Bitcoin, ETH, Litecoin, Bitcoin Cash, and USDC. And then on the derivative side, we have, as you mentioned, just launched Bitcoin and ETH futures on January 11th earlier this year. So that's on the exchange side. And then, as you mentioned, we also clear these assets. And so one of the things that when we launched our derivatives exchange that I think is really important is we launched a brand new clearinghouse, essentially, for the clearing of margin futures. So previously, Cboe Digital offered fully funded futures trading and clearing. So we've had this clearinghouse. It's regulated by the CFTC, and we've had it for a number of years, but it was only a fully funded kind of clearinghouse. And so derivatives has always been one of those things that offer capital efficiencies to customers. And so the concept of margin or leverage has been one of those things that's really important to the ecosystem. And so with our launch on the 11th of the actual trading, we launched the ability to clear on margin those contracts in our own clearinghouse called Cboe Digital. And so we're really excited about that. One of the things that dovetail really nicely into is something that we're also working on and have been slowly building out in the spot side is the clearing of spot crypto assets in a very similar way that we clear the derivatives contracts. And so one of the things that obviously a lot of folks will know is Bitcoin and ETH and these coins are traded at a lot of different venues. Not all venues settle their own transactions. And so you're really starting to see the growth of ECNs and kind of matching only platforms that then look for third parties to be able to clear and settle those transactions. And so that's something that we're actively building out and currently support for our customers to be able to clear their trades if they're occurring on another platform. And so we're really excited about how that growth opportunity presents capital efficiencies and netting opportunity for participants that are active on multiple platforms, but are looking to have that same, what I call it, TradFi-like CCP type of interaction and benefit in the crypto space.
Yeah, that's really interesting. I actually have a few follow-up questions here. So traditionally in the TradFi markets, a clearinghouse ensures that if one of the counterparties blows up, essentially the other counterparty is still made whole and sort of the clearinghouse is standing in the middle. So does your own clearinghouse provide those types of guarantees as well for the futures that are the leverage products or futures or anything like that?
Yeah, we do. We actually on both sides of the fence, I would say, we as a clearinghouse are kind of stepping in the middle, as you say it, between the buyer and seller on the platform. And on our spot platform, everything's fully funded. So we're seeing those funds prior to trade, making sure our participants have the funds in place and are able to trade, whether it's buying Bitcoin or selling Bitcoin as an example. And the same thing works on the derivative side. The derivative side is a fully intermediated model regulated by the CFTC. And so what that means specifically from a clearing perspective is only futures commission merchants or FCMs can be members of the clearinghouse. So an FCM will become a member of the clearinghouse and they'll work with us along with the trading participant to be able to set up their risk and make sure that they're funded and the margin is funded appropriately to be able to trade derivatives on the platform, and then those said derivatives be able to clear through that FCM at the end of the day. The spot market's a little bit different in the sense that FCM doesn't necessarily is involved in the value chain. A lot of trading in the spot market is direct at a platform level. And so we see that. And so we actually, on the spot side, the trading firms are actually members of the spot exchange and clearinghouse to be able to bring the funds in and trade it. So we don't have that FCM intermediation there. And so the way that we kind of resolve the risk around that is the fully funded model in this example.
Yeah, that makes a lot of sense. And then you mentioned something else that's really interesting. Like now that you guys provide the clearing for spot, you could have venues that offer just a matching component only. So if I think about Coinbase, I think they probably offer both the matching and the clearing because there's a bunch of customers that have their accounts there. But if I think of another party, I don't know if this is true of Robinhood, but I could think of Robinhood where they essentially put on sort of the matching engine and have the traders essentially decide to buy or sell. But then they would use a third party to actually clear, and that would be essentially swapping the funds from one asset to the other, or from one wallet to the other. Is that what the clearing actually means?
Yeah, similar. So there's a couple different products that we offer on the spot side that kind of achieve this. The first thing we refer to is kind of what we call our settlement service. And so our settlement service allows for folks that are trading bilaterally in the over-the-counter market to resolve the settlement risk associated with the trading of those, right? So you get this scenario, you and I are swapping dollars and Bitcoin. Who presses go first? Who sends Bitcoin first? Who sends dollars first? And obviously, there's that risk of once you send your Bitcoin, maybe the other person doesn't send their dollars.
Right.
And so we offer the solution that allows participants to bring their funds to our platform and settle those transactions on a netted basis in our clearinghouse, kind of removing the operational risk and the settlement risk associated, with that trading. The other aspect is you're using a venue, and so there's a lot of growth in venues called ECNs, which is a very big thing in the FX world that's starting to kind of migrate itself into the crypto and the digital space. And so all they're doing is essentially providing a matching capability. And so customers that are customers of that platform and then also customers of Cboe Digital can trade on that platform. Those trades are sent to our clearinghouse as a trade, and we will then take in that trade, make sure those participants have those funds, and then at some point in time in the day, make sure clear and settle that trade, and then those funds are available for those participants to take and move, whether they want to keep them on platform and keep trading, or move them to a self-custody wallet or a place of their or a different custodian outside of BitGo, who's the custodian that we use today. That they have that choice. And so what that does is, in my world, what I would say is we operate an exchange. So let's say you're trading on Cboe Digital and you're also trading on one of these ECNs, right? The beauty is, let's say you've bought on Cboe Digital 1 Bitcoin and you've sold 1 Bitcoin at a different price on this ECN. You're effectively flat from a capital perspective if both of those trades are being cleared by Cboe Digital. And so now traders are able to realize those capital efficiencies. What it also does is allow them to aggregate their capital into one place. One thing that's challenging with the crypto market structure is the fragmentation.
Yeah.
A lot of places to trade, a lot of places you have to deploy capital, whether it's dollars or coin. And so by allowing these things to look more like a CCP, you have one place where you're deploying your capital and coin, and you're able to see that kind of the capital efficiencies associated with that.
Yeah, that's fantastic. So kind of moving away from clearing, one of the things that is really interesting in crypto, I've been in the crypto space for quite a few years now, but as futures started trading in perpetual contracts as well as sort of the offshore CeFi venues, we've seen like really elevated basis trading. Even in Q4 of last year, Q4 2023, we actually saw like the 30-day basis trading around 16% for Bitcoin. Now, we saw that on CME, and CME is kind of a hard place to trade the basis because you have to manage the cash and short the future, and kind of that's a lot of moving parts. Now, obviously, with Cboe Digital, one of the beautiful things is you can deposit actual Bitcoin and then sell the future against it, and now you're perfectly hedged and you can capture that basis. Have you seen a lot of demand for this type of trading from the institutional world?
So yeah, number one, I would say that's the goal, right? So you've kind of nailed the utopia, I think, and we see a lot of demand for this as this concept of cross margining, if you want to call it that, which is what I would say very native in the international space, where you've seen these platforms say, I'm going to take in Bitcoin, I'm going to let you sell futures, buy futures. I'm using the Bitcoin as collateral, as an example. So right now in the U.S., there isn't a derivatives clearinghouse that's able to take in Bitcoin as collateral for a margin futures product. Right now, it's usually like dollars or treasuries or something like that. And so, to your point, there's a lot of natively long participants that have coin that they like to use as collateral. So that's one thing we're actively looking at, and we think it could be a great advantage or innovation for the U.S. ecosystem is finding a way to allow participants that have spot, whether they've bought it on the Cboe Digital spot market or just brought it to our derivatives clearinghouse to be able to leverage that for the purposes of trading in derivatives contracts. We're not quite there yet, but actively looking at ways to try to bring that to the ecosystem. One of the other things you're mentioning is the basis, and that's really, obviously trading the difference between the spot and the futures market. And we are seeing quite a lot of demand on that. And so that was one of the ways or the reasons that we designed our system and our technology stack the way that we did is it's all built on the same stack. So if you become a member of Cboe Digital Spot Market and then you become either a member of the futures market clearing an FCM or you're leveraging an FCM to access our futures market, you're now on the same technology, potentially different fixed sessions, but the same technology stack to be able to trade the basis. Whereas to your point, there's other places you can access derivatives or spot, but the technology stacks are different. Sometimes even the companies are different. And so that obviously poses a challenge for a participant to be able to do that. So we're actively seeing engagement there and folks that are looking to trade the basis, to access the basis, and are coming to Cboe Digital to be able to do that more efficiently. With one platform, one technology solution, one operation staff, one company, versus maybe bifurcating their experience with trading derivatives at one venue and trading spot at another, and potentially having the operational and the capital and the technical inefficiencies that might exist in trying to do that.
Yeah, that's really interesting. You mentioned about the technology stack. So I just want to poke in there a little bit more. So traditional finance has a lot of really interesting technology stack solutions, such as co-location. Is that something that you guys offer as well? And if so, why is that important to market participants?
Yeah, it's a great question, and we see offerings kind of vary across the crypto ecosystem. So Cboe Digital was really built with the traditional financial kind of market structure really in mind, in the sense that our matching engine runs on bare metal. It runs in a data center that's beside a lot of the other data centers or the other servers that might be running some of the other highly liquid exchanges in the U.S. called equities, equity derivatives, futures, et cetera. And so we've built it really the same way. Our messaging structure is natively on FIX, though we offer REST API and WebSocket, which is much more of a crypto native messaging structure, or has been accepted in the crypto space and used more heavily. And so to that point, we see customers looking for co-location, asking, and looking for platforms that are built the way we've built for a number of reasons. Number one, from a throughput and a latency perspective, there's potentially advantages depending on the setup, but also it allows customers that are incredibly latency sensitive to try to eke out as much gains from their setup as possible. And if you think about a global market maker, right, that's making markets in the US, they might be making markets in other platforms. They might be looking at market data from across the globe, whether it's perpetual funding rates or other futures products and spot products and pricing all over the world, right? They're aggregating all this information, taking it from multiple places around the globe, trying to do so as fast as possible, and then be able to react and update their quotes as quick as they can, right, to manage their risk, right, in the sense that the quote out there is their risk. And having co-location, having FIX or API native, like binary type of APIs that are pretty prevalent in TradFi, as an offering, we're not on the binary side, we just have FIX today, are some of the things that those types of market makers are really looking for, to be able to be as quick as possible, to be nimble, and to be able to update their prices when there's news or when there's something happening that they need to, and to do so where they know that they're actually they're going to get a response, a deterministic response, something that they can expect, something that they're used to from other types of venues that they might trade on. And I think we've seen that the interest in those types of offerings grow, and more participants asking those types of questions as they onboard or are looking to onboard their next crypto platform or their next place where they want to trade.
Yeah, that's fascinating. Another thing is, if I'm trading on Coinbase, for example, I log into their website and I trade directly on their website. But if I'm trading like a CME future, I can actually access the CME exchange from Interactive Brokers or whatever broker I'm using. How is it for Cboe Digital? Do I need to sign up and trade directly on your guys' interface, or can I access your markets from a broker such as Interactive Brokers?
Yeah, it's actually a really timely question because I think there's a couple of things happening for us. Given we just launched futures in January, and
Hmm.
really as we continue to expand that and we onboard more brokers and more FCMs, you're going to be able to access the futures contracts through brokers like you've just mentioned,
Mm.
right? And so as we expand that access, I think that offering will be out there for those customers. From a spot perspective, we're an intermediated exchange only as well, just like we are in the futures market. So we don't onboard direct retail customers. So you can't come to Cboe Digital, open an account and trade and fund it as like you could on a Coinbase or a Kraken or a Gemini
Hmm.
or many of the other ones, right? Not to pick just those three, but you can onboard with a retail broker dealer, right? And there's a tremendous amount of those out there in the industry, and we work with those brokers to be able to provide them access to our markets, our liquidity. And so it's possible that if you enter an order through that retail broker dealer on the spot side, that it may come to Cboe Digital
Mm.
to trade. It may go to another platform. It may, depending on their setup and where they're accessing liquidity, which is very similar to how equity markets work, or even equity derivative markets work, where you open an account with a retail broker dealer, a Robinhood, a Webull, a TD Ameritrade, a Thinkorswim, a Tasty Trade,
Hmm. Hmm.
et cetera, and they send the order to an ultimate exchange or a place of execution. They're not necessarily taking the other side or trading it, or they're not the market maker, right? And so we've structured that because the look, the feel, the experience is similar for those retail broker dealers. And then we believe as we see the ecosystem grow and the asset class continue to grow, we're going to see more and more structure like that, which is more akin to some of the traditional markets.
Yeah, that makes a lot of sense. And so I guess I also saw on your website there's like an IRA solution. So I guess that would be going through my broker and essentially probably or someone who offers me an IRA solution, and then essentially going through to Cboe Digital to actually do the transaction in the spot markets. Am I thinking of that right, or is there a separate IRA solution?
It's very close, and I would say the IRA world has been something that we've been in very early, as there wasn't a lot of platforms that offered IRAs access to crypto, and so
Hmm.
we've worked with a select number of custodians on the IRA side to be able to offer their customers the ability to access crypto. So if you happen to be working with one of those IRAs and they're listed on our website, you can go through them and have an account opened at Cboe Digital to be able to acquire, the crypto coins that we list for trading in an IRA style account, if that's what you choose to do.
Cool, very nice. And you mentioned this earlier, but I just want to revisit it. So the custody solution, that's been a big deal in sort of institutional investing in crypto. How do we store these funds? Is it safe? Obviously, it's a new type of risk to be hacked from your funds and these like bearer assets. How do you guys deal with custody, and what's your solution around that?
Yeah, so Cboe Digital is what I would call a non-custodial exchange, but we do work with BitGo for cold storage. So in our, we're I would say custody agnostic, and so I think as we see the market and our customers demand other custodians, will ultimately want to be able to support, and will support them. And so what I see in terms of the future, in terms of what the ecosystem will look like, I think custody is an important choice, and I think we're seeing a trend where more and more participants, especially institutional participants, want to be able to trade, call it out of their cold storage,
Hmm.
right? So I'm going to put my Bitcoin in cold storage where it's the safest it possibly can be, but then I still need to be able to access liquidity, trade in and out of it if I wish, so as I would like to. And so I think we're going to continue to see more and more development, more and more work done there to allow customers to be able to do that. And I think we're watching that space very closely, because from my perspective, I see that as a really important evolution in the ecosystem, and really to get more and more support from more and more institutions in, call it the native crypto, Bitcoin, ETH, kind of, liquidity, and getting them access to the asset class. So right now, we work with BitGo, and we'll continue to expand that as the market demands it.
Yeah, that makes sense. I saw with the spot Bitcoin ETFs, a lot of the ETF providers are using Coinbase for custody. I think Fidelity is the only one who's self-custodying. just kind of one more quick question around custody. Do like third-party providers of custody like have some sort of insurance or anything like that? Like, what kind of protections are there?
Yeah, and I think that probably varies from provider to provider, right? And so every provider will offer different types of insurance that cover different types of events,
Mm-mm.
right? Loss or theft and things like that. And so I'd always encourage everyone to kind of, if you're looking for a custodian, right, you want to kind of do your own research there. It's not I would say a standard. What maybe Coinbase custodian versus BitGo versus there's tons of names, Anchorage and Zodia if you're looking at it, and maybe or Copper. I don't want to leave anyone out, but there's plenty more beyond that.
Yeah.
But I think they're all going to offer different styles and different types of insurance for their
Cool.
customers. And so I would always just say, hey, make sure you read about that and understand it, so that way if something were to happen, you understand kind of what's out there for you.
Yeah, that makes sense. Absolutely. So Cboe Digital has spot markets. They have futures markets. Now Cboe is obviously the world powerhouse for options trading. Is there any options plans in the Cboe Digital future?
Yeah, it's definitely a warranted question. Cboe being the home of options, will we launch options on futures for Bitcoin? It's something that we're looking at, right? We're seeing open interest grow in the U.S., both in futures and options and futures at other venues, and so it's something that we'll continue to watch. And as our customers, kind of demand and tell us what the next products are they want us to focus on, we'll be listening. And so we're going to go where our customers tell us to. But obviously options is one of those places that we're watching. And then we'll also be looking at, other types of derivative products, futures, outside of just on Bitcoin and ETH as well, to kind of continue to expand the offering as we get into 24.
Yeah, that makes sense. Cool. So just kind of before we close up here, I just want to touch maybe on some more kind of John Palmer personal questions. So maybe you could just give us a kind of a brief background on how you found yourself into the career you have today.
Yeah, no, it's definitely an interesting road for me, in the sense that, I went to school, finance degree. I actually spent a little bit of time in corporate finance doing long-term capital planning for a company. I grew up in Ohio, so this company was based out of Ohio. But I had an internship actually on the floor of the Mercantile Exchange as a kind of runner clerk for a little while, working for a couple brokers, and that really kind of was my first taste into derivatives, really, TradFi derivatives especially. So I went back, I got my degree in quant finance to kind of originally thought maybe I would trade, but really kind of fell in love with the intersection between tech and the business and really building out things that the trading community used. So that kind of powered me into kind of a product role, and I ultimately ended up landing some time at some exchanges. So I started at ISE, after some time in the industry, and started really building exchanges, building options exchanges. I actually joined the Cboe organization through the BAS acquisition in the fall of 2016. And continued on kind of building exchange functionality across the board in both futures and then also equity derivatives, and then moved into more of the business and started actually running the revenue drivers and the strategic vision for the options business, and ran the U.S. listed options business for Cboe for a number of years, and then kind of got the crypto bug, as a lot of folks did, and kind of jumped into crypto and kind of my reasoning there was I saw this as a new asset class, still developing, a lot of things that we can take, that we've built, that we've learned from some of the traditional markets that we've run, and bring them to crypto for the benefit of the ecosystem, and to attract some of the institutions and the buy side folks into the ecosystem based on how they're using some of the other exchanges and the things that are important to them. And so it was a really interesting opportunity. So, I jumped in, and so a long story short, found my way back to Cboe. Cboe had acquired ErisX, which we rebranded to Cboe Digital in 2022. And so I joined the team to run the effort at that point. So I was really excited about it.
Yeah, that's fantastic, and I share that sentiment. We're so lucky that we're here at the birth of a new asset class. That's pretty interesting.
Yeah.
What do you think is something that newer options or people who are new to options often miss that you've learned through your career?
I think there's a couple things, right? If you're trading options, it's always you want to make sure that you're comfortable with it. It's especially if you're new to it. It's a derivative. It has some really interesting characteristics. These things called Greeks and the way that they impact the potential price. And so I think it's always important to kind of understand those at some level before you engage in it. And not everybody has to just buy what we call naked options, right?
Mm-hmm.
Buying a call or selling a put. Sometimes the best place to start is to look at a strategy, whether it's a caller with limited risk, or maybe you want to sell some covered calls, they call it, because you own the stock, and you're selling calls to generate some income. I think you want to look for an easy way to understand how to enter the options space. To get comfortable with it. We call it don't boil the ocean, don't try to do too much too soon. And there's a lot of really great resources where you can go out and do that. And Cboe, being the home of options, offers one of those resources I'll tout, is our Options Institute. So Cboe.com/Options Institute. There's a ton of educational opportunities, both in terms of collateral that are self-serve, and then also classes that the team puts on to be able to educate people on options, whether it's basic options or advanced options. I think are really fantastic. And then once you kind of understand what they are, what a call is, what a put is, what the Greeks are, where I really got into the depths of options was reading Shelley Nattenberg's Options, Volatility and Pricing book, which is, probably one of maybe the most quoted books, or certainly one, if you ask the street, everybody in options probably at some point will refer to that book. I think it's a fantastic book that covers both the basics, but then also the advanced aspects of options. If you really want to get into options trading, definitely a must read from my perspective. Very enlightening and does a really great job of educating.
Yeah, 100%. That was actually going to be my next question, so you beat me to it. But yeah, I totally agree. I remember when we were going through sort of the DRW options training program, they basically give us that book and have us work through it and do tests. Yeah, exactly. So last question.
Yeah, it gets pretty detailed. I will say, like, the second half of the book really gets in the weeds. So it's like you want to make sure you have some scratch paper, because sometimes it just goes right over your head. But I think that's why it's important. Like, you can go to the Options Institute and get the basics. There's also an options industry founded educational opportunity. They call it the Options Education. Optionseducation.org, I think, is the website, or OIC, and it's an industry-based education group that is, its goal is to educate people on options. So lots of, I would say, easy places to get really, really basic understanding of options. And then once you have that book is a good next step read.
Oh, that's fantastic. We'll put all those links in the show notes for listeners as well. Last question here before we close up is, what do you like to do outside of work? Do you have any hobbies or anything you like to do for fun?
Yeah, I actually do. So I'm a triathlete. In my spare time, outside of the family and spending time with my kids, I spend time, on a bike or running or swimming, and been doing that for the better part of 10 or 12 years. So that's both a stress reliever for me, but also keeps me fit.
Yeah.
And something that I really enjoy.
That's fantastic. Well, John, thank you so much for coming on. I think this was really interesting. I'm excited to see everything that's going to be going on at Cboe Digital. So thanks again.
Awesome. Thanks a lot for having me, Greg.
Absolutely.